Good morning, everyone. Welcome to Pre-Market News and Views by In Money Stocks. Today is Thursday, May 30th, 2013. Thank you all for tuning in. We're going to jump right into the ES futures here. You're going to see that the futures are climbing higher today by about 6.5 points at the moment. A little while ago, or I should just say 2 minutes ago, the weekly jobless claims report was out, and it looks like that jumped up by 10,000 jobs. So not a big deal there. But the market seems to like the number, meaning that more quantitative easing will stick around. Also, I believe that first quarter GDP growth was revised down to 2.4%. So you see how weaker data is actually beneficial to the market right now. So you got a weaker GDP number, and you have also a weaker jobless claims number. So jobless claims number jumped 10,000 to 354,000, and first quarter U.S. GDP growth was revised lower to 2.4%. Now, I don't know if anybody believes these numbers. I certainly don't, but it's just conveniently it's conveniently lowered after GDP is lowered on the revision, and then you have these weekly jobless claims lowered or raised to say that, hey, there's more jobless claims out there. And it just gives the market more fuel because they think that the central bank or the Federal Reserve is going to continue to keep up with their quantitative easing instead of tapering off. Now, what I don't understand is why the Federal Reserve even came out and made a statement that they would continue to taper off if they weren't going to do it. That's the part that I don't understand too much. But I guess they just want to keep sending mixed signals. They don't want the stock market to overheat too much because constant buying will just continue to take place. Either way, markets are extreme. They trade like a pendulum. They go to one side and then to the other side. They always overshoot. They never meet in the middle. They never find the mean. They always go to the extreme levels. So either way you slice it or dice it, right now the futures are up by about 6.5 to 7 points. The economic data out of the United States is pretty weak, and I guess that's really all the market cares about. Will that quantitative easing stay in place? Now, a few other things to talk about real quickly is, one, last night the Asian markets were mostly lower, but the Nikkei 225 was sharply lower. That finished down over 5% last night, a 737-point drop in the Nikkei 225. So when you take a look at the market here, do they really care about the Nikkei? I don't think so. I think what the market really cares about is what the Japanese yen does against the US dollar. And right now the dollar is still strong against the yen. And that's all that seems to matter. If the yen starts to get strong against the dollar, watch out. There's going to be major problems. And that's what traders need to watch for. So again, it's all about the currencies. The currencies will dictate everything else. So keep an eye on the Japanese yen. Right now this is a dollar yen chart, meaning when it goes up, the dollar is strong against the Japanese yen. If this starts to fall, watch out. That means the Japanese yen is starting to get strong, and that will mean problems are coming for this market. So that's what you want to watch for. That's what's important. You throw the jobless claims out the window, throw the GDP out the window. It's all hogwash. Nobody believes those numbers anyway. It's all just pre-written. Who can actually make anything out of it? Watch the Japanese yen. If this dollar yen starts to break down, that means the Japanese yen is getting stronger, and this whole deck of cards falls apart. That's really the bottom line. All right, let's take a look at a few other things out here. It looks like a little bit later today we're going to have April pending home sales data out at 10 a.m. Again, I don't know what to make out of it. I could care less about it. Right now, it looks like a lot of the home sales are happening because private equity firms are buying single-family real estate. That's really the bottom line. So, again, if things improve, they'll just come out with a report saying they're not improving. If things really don't improve, then they'll come out with reports saying they're improving. It's all mental-driven. Either way, the market will have a breaking point at some stage of the game. I think I know where that is, but we're not there yet. Looking at a few other things in this market. One, you want to take a look at the European markets today. They're all trading higher, but they were all sharply lower yesterday, so they're rebounding a little bit today. the French CAC 40, which is really beyond me, how that's up over 1%, I'll still never know. I think France is probably one of the most dire countries in Europe right now. But either way, that one is holding up the best. Looks like the German DAX, which is the most important, is up about 0.75%. The FTSE 100, which is England, they can print their own money. The London market, they're up only 0.3%. So we're going to have to watch that pretty closely. But again, I'm not going to make too much out of this one today. We'll just see how these European markets play out later. The IBEX 35, which is Spain, that is flat on the session. So unchanged, not down, not higher, just flat on the session. So we'll see how that one plays out. But again, this is really a turbulent time for these markets, where this is still the most important chart out here. Just watch this. When this chart starts to go down, guess what? The stock market's going to start to go down. And here, I'll prove it to you. Look at the futures. Look at the futures starting to fall right here. Okay? Go back to dollar yen. Dollar yen starts to dip. Look at the futures. Futures start to dip. All right? So there's no real secret. The dollar yen chart, most important chart anyone could follow right now at this time. All right, let's take a look at a couple of stocks in the news today. I believe, if I'm not mistaken, I believe there were some upgrades and downgrades today. I don't think you want to make too much out of it. One stock we're looking at today for a gap play will be Big Lots. I'll give that out in the chat room. That'll be posted around 9 a.m. That's just one in particular stock that we are looking at. It looks like you have a lot of share buybacks today. EMC looks like they're announcing a buyback. You can see the stock getting a little bit of a pop. Be careful with EMC. It doesn't have much left in the tank. Facebook has gotten an upgrade today. You also had share buybacks, I believe, in Priceline. So Priceline is making a share buyback. Now, I just want to point this out. If I'm a long-term investor, why in God's earth would I ever want my company to buy shares back at highs? Save that money and wait for a big dip, and that's where you buy shares back. But these companies, they go ahead and do share buybacks at all-time highs. It still cracks me up to this day how mismanaged all of these big businesses are. Another stock that reported earnings today was Joy Global. It looks like they beat on the top line, but they cut their full-year guidance, so that is not a good sign. Anytime a company cuts guidance, they could be under pressure. So keep that one on your radar today. That one could also be under pressure. O'Reilly Automotive, another one with a share buyback today. So you got a lot of share buybacks. First Solar was upgraded by Goldman Sachs. I'd be worried. First Solar does not look like it has strength to me. First Solar was upgraded by Goldman Sachs. Also, Goldman upgraded Lockheed Martin and Northrop Grumman. These stocks have already made huge moves. Who would be upgrading these things at these levels? Do not buy into this. Do not buy into this by any means. I think they're upgrading them just to sell it into the public. But that's my opinion. In any case, we'll see how this market trades out today, and we'll see where it goes. When we're looking at gold and silver today, gold is getting a nice little pop. The dollar has softened up a little bit. You can take a look at the U.S. dollar index. You'll see dollar is moving down. So the GLD should be getting a bid, and you see the GLD trading up towards that 136 level. So gold is getting a little pop today, trading around 1406 at the moment. Oil is a little bit lower. Light sweet crude is trading down 41 cents to $92.56 a barrel. Right now, light sweet crude is a little on the weaker side. Let's take a look at the USO, which is a good proxy for oil. And you'll see that's trading at around 32.90, closed at 33.10. So that is a little bit on the weaker side as well. But again, you heard it here first. Just keep an eye on that dollar-yen chart. If this goes down, market's going down. This goes up, market's going up. It's just that cut and dry. With that said, everybody, I want to wish you all a great trading day. And we'll see you on the charts. Have a good afternoon. Have a good morning. Take care.